Morning. It's Harvey Jackson from Producer Profit. Just a couple things. Mooseman meeting tomorrow at the Legion Hall, 710 Main Street, and the next day, Wednesday, we'll be at Rawhides. So looking forward to seeing you there. Uh, Palm oil is rising. Crude oil is basically unchanged, but has a little bit of an increase if we look at the chart. Some of the currencies against the U.S. is actually trading a little wee bit higher, putting a little bit of pressure on the U.S. Dollar index. So what I'm looking at here is China and their expected imports, and this is according to the USDA, right? And I'm not saying that this is 100% correct, but they've you see 3.4 for this current year is their expected imports. I think they've already surpassed that, but the USDA might be a little bit delayed on that. We'll look forward to that in I think December 10th when the next USDA comes out. So ending stocks, China actually has a good amount of ending stocks. They try to hold a lot of their products so that they have it from one year to the next and make sure that they have their people fed. Canada looks like it's got a good size ending stocks, and European Union is quite tight. And if we look at this, a little bit farther, so the canola oil imports, U.S. is number one, China is number two, and that's all basically all coming from Canada. But I can't say that for certain, but they import it for a bit. And if you look at the ending stocks, uh, the canola oil, China is still holding it for a bit, and then there's stocks in Canada as well. It's probably just what's in the tanks come year end. Wheat ending stocks, they are the biggest by all means, and holding wheat. One thing to note is just our ending stocks globally keeps on tightening up over the last few years. We are basically going back all the way to 2016, and we'll see how this kind of plays out. The other thing to note is U.S. is the next, and Canada's way down in here. So as far as ending stocks, wheat imports, China is number three. You got Egypt and Indonesia ahead of them. So they're a large grower of their own products, of course. Soybean, they are by far the largest soybean importer. A lot of that's going to come from Brazil. European Union's the next importer as well. And it's just to show where this product is basically moving. Corn imports, U.S. is or Mexico is number one. European Union and China is in number third place, and they are significant, when it comes to keeping the U.S. balance sheet kind of in check. Australia production, you can see since the drought of 2021, big surge in uh, uh, in production, good production years. Looks like they are going to hit this target, and you can look at this and you go, who's actually the producer? Canada, European Union is a good sized producer, and China is a good sized producer, and I think this is probably going to get smaller. Unknown there, unknown that I think the expectation China and India are going to grow, and then there's Australia. Uh, so if we look at this next page, who's the exporters? Canada and Australia and then Ukraine. So if China is going to cut us off from buying, where are they going to get it from is the question. Here's our pace. So we're over 3 million metric tons export. And if we continue this pace, we could be, staying above the past 5 years, we could be, north of 8 million metric ton exports, which we haven't seen for quite some time. The other thing I want to note is crush pace is around 3.25, and that's crush, and you got exports around 3, so you got a total of 6 million, 6.2 million product kind of displaced from Canada already. Let's just have a look at the prices here. Canola is up 6.5. Rapeseed's up a couple. Soybean oil is up 0.4%. Palm oil is up, and then the rest of the complexes are on the cereal side is down. Looks like there possibly be a little bit of recovery. Nice green day here today, and here it should be green too, but I don't know. Bar chart doesn't always work exactly the way it should, but anyway, it's green here, or it's green here, but not green there. So the colors are off. Rapeseed is approximately $49.50 higher than Canadian canola price in Canadian dollars. So still a lot of support there. Soybean oil finally got a green day after the 4-day slide going down. Looks like there should be catch some support here, of course, as well around that 41 cents, and we're trading right right now around the 42. So perfect. Look at palm oil, pretty good leg down, and a little bit of a catch here. Uh, See if we can actually bounce off of this support here. Chinese rapeseed oil broke through support, and see if that can actually continue to hold as well. So this is where the crude oil is actually trading a little bit higher. Probably not worried about uh, really anything until it gets above that 72 cent or $72 a barrel, to say that there could be a trend change there. Soybeans, long slope down, still trading below $10. And the Canadian dollar, a little bit positive here after its full uh, full retracement down to 71 cents. Wheat um, looks like it's having still a lot of trouble, and still a pretty well entrenched downtrend. And you see that even in the DEES 25, still looking for that kind of an area for a target again. Hard red uh, wheat, same trend downwards. Look for some support here, maybe for corn or something like that. Milling wheat, a little bit more supportive, but not a terrible amount. Here's your corn. Looks like we're in this wedge here, so if we can kick ourselves out of the wedge and get a little bit of strength going higher, that'd be great. Report next week for the production of principal crops, and then the week following is the USDA. So those are the next two reports that we're going to be paying attention to. And Dean York may be contacting some of the guys out there in regards to their chem needs if anybody has any needs for that. So we'll chat with you tomorrow.